Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by United Wholesale Mortgage.
Is TRID slowing you down? Not if you're closing with UWM. While other lenders are struggling, we're closing most TRID loans in 15 days or less, thanks to easy-to-use tools like UClose and Ease, and direct communication from submission to close. Get United at UWM.com.
Welcome to Master of the Markets. I'm Barry Habib at MBS Highway, and this is created exclusively for Mortgage News Network, brought to you by our good friends at United Wholesale Mortgage, where they can really help you grow your business with so many terrific tools that they provide you. For example, if you have a transaction that needs MI, why wait days when you can get instant MI through United Wholesale Mortgage and speed the process along? All right, it was Jobs Week last week. It was a surprise for many to see 271,000 new job creations for the month of October. This puts the Fed in a position where Fed might have to hike on December 16th, which has certain implications for us. We'll talk about that in a minute and break down the importance of that jobs number and what to look for in the weeks ahead from interest rate environment, housing environment, and from the stock market's perspective as well. So right after the number was released, mortgage bonds took a nasty turn for the worse. Interest rates moved higher. Stocks didn't like the number either. Stocks thinking that now maybe the Fed might be put in a position to hike rates, the punch bowl gets taken away. The mortgage-backed security market, mortgage bonds, they didn't like the number, those traders, because we saw as part of the jobs market, a jobs report, one of the components was hourly earnings, was up 2.5% on a year-over-year basis, the biggest gain since 2009. And what that means is that people are now earning on average $25.20. That's up 9 cents an hour. That's a pretty big gain, up 0.4% in 1 month. And that means the average person in the U.S. earns about $45,000 a year because there are on average 34.5 hours in a work week. So these numbers are numbers that, because bonds hate inflation, could be potentially showing some wage pressure inflation. That's why bonds didn't like this. Now, interestingly enough, if the Fed follows through and doesn't chicken out and hikes rates on December 16th, bonds might feel more comfortable with this. Worst case scenario for bonds, there is another jobs report coming up first week of December for the month of November. Worst case scenario for bonds is if that jobs report isn't as strong and the Fed chickens out and doesn't hike rates. If that number is strong, Fed hikes rates, bonds feel okay, inflation's being controlled, mortgage bonds probably do well, rates stay very good. So we have to watch that dynamic moving forward. Some other interesting components of this jobs report was that when you take a look at the unemployment rate, it dropped from 5.1% to 5%. And also revisions for the past couple of months were up an additional 12,000. Now that 271,000 job number was about 100,000 more jobs than expectations. So the market didn't really see this. But hey, look, if you took us up and became a subscriber to MBS Highway or even were on a free trial with us, you know you were protected because we had been locking a couple of days in advance, right before the report, and we had warned that we thought this report would be much stronger. Why? Because when you take a look at the numbers that came out from ADP over the past 3 months, they were much stronger than the numbers from the BLS report. And the BLS, Bureau of Labor Statistics, that's the big one that we just got on Friday. That number usually reconciles pretty closely with ADP, and they were so far off we thought there was a catch-up due, and we thought this would be a big number. Well, sure enough, we got a big number, and we got revisions, so now the catch-up is pretty darn close. We're back kind of in line. ADP the last 3 months, averaging 185,000. Private sector on the BLS report, now 181,000. So they've come much more in line with each other. And that's the important thing, is that this report was one more that brings us back in line, not that the 271,000 on itself shows that the job market is now rocketing. So keep that in perspective. All right, what does this mean for housing? Well, those average hourly earnings being up on year-over-year basis at 2.5% means that home prices could increase if interest rates stayed relatively stable by about 10% without any ill effects, maybe even higher than 10%. Because home prices have been rising at about 5 to 6%, it tells us that we are in a Goldilocks environment and affordability levels just actually improved. So even though prices are going up, they're becoming more affordable because incomes are more than keeping pace with the rise in home prices. Because remember, it's not home price, it's home payment. So because typically speaking, the home payment is on a monthly basis is only 1/4, 1/5, 1/3 of the monthly income, you can sustain a level of price increase in the home. If interest rates stay the same, you could see home payment go up a little bit, and incomes don't have to go up by that amount. They only have to go up by 1/3, 1/4, 1/5 of that increase in payment to keep pace. So therefore, this makes home prices actually more affordable right now than they've been in many years. So very good news on the housing front. So what does this mean going forward? Well, the stock market doesn't really like the fact that maybe the Fed has to think about hiking rates and the punch bowl gets taken away. As I've said, bonds, well, from the bond market's perspective, interest rates should remain pretty good, but worst case scenario, we see continued improvement and the Fed chickens out on hiking rates. I think that rates move up a little bit, but not too much from here. In fact, bond prices are near an important floor of support. If that floor of support holds, we could see some improvement in rates this week, but we'll be advising you on a day-to-day basis. In fact, why not jump on board for free? Get your free subscription to MBS Highway on trial. And if you've taken us up on that and haven't pulled the trigger on subscribing, well, why not do so? You need to be the expert in your marketplace. You need to build a brand. And by helping your customers navigate through this and helping your real estate partners navigate through this, you become a resource that they count on. Why not do it? Click on the link. All right. Hope you guys have a great day and a great week ahead. Talk to you next week. Bye-bye.
Today's Master of the Markets was brought to you by United Wholesale Mortgage.
At UWM, our AEs receive over 500 hours of training each year to keep you current with the industry. We give you direct access to your own team of underwriters who return your calls in 3 hours or less. And we provide exclusive products and tools that give your business a competitive edge. In fact, everything we do at UWM is dedicated to championing your success, which is why more brokers choose UWM than any other lender. World-class service, exclusive products, groundbreaking tools, and you. Get united with us at UWM.com.
This is Mortgage News Network.